Well, global markets have seen a last little spurt from the strength of Nvidia, but will it be enough to sustain the rally, or is this about the last hurrah for the great gains that we've seen over the past 3 months? So hi there everyone, welcome to the Traders Circle weekly market update. Today is Tuesday the 27th of February 2024, and before I begin, you do need to be aware that whatever I say is general advice only. It does not consider your personal financial circumstances, and you have to decide if what I'm saying is appropriate for you. So the first topic of discussion for everyone this week has been Nvidia. Nvidia had a fantastic report on Wednesday last week. They jumped extremely strongly. In fact, I think they were up around 16% on the day. It was the largest single day gain for any listed company in global history ever. Market capitalization increase of around $280 billion, and it was monumental. It dragged basically global stock markets with it. We saw the US market reach a fresh all-time high. We saw other global markets push back up. Fresh highs recorded in Japan, for example, and other parts of the world as well. It is really interesting because markets have been sort of stalling a bit, and I think it looked like they were starting to perhaps teeter on the brink, maybe about to see a little bit of a pullback, but then the Nvidia result, which was fantastic, sort of restored the confidence in the bullish move and allowed people to start buying things up just a little bit further. I did read a comment from one analyst in America that said that perhaps we've reached the point of the market depth cycle where the market is relying on just one individual stock. And in fact, had that report not been good, it perhaps would have heralded the beginning of a bit of a profit-taking pullback. But the report was good, and like I said, it did allow things to go a bit higher. Nvidia pushed further higher, and in the aftermath of that, everyone was scrambling to increase their price targets for Nvidia. Looking at the numbers, it is very hard to justify current prices for Nvidia. You do have to extrapolate, the very, very strong growth at present out, quite a way into the future, paying a very high multiple of earnings, and that's after achieving some very, very strong earnings growth numbers. It doesn't mean it won't be achieved, but you do want to sort of start considering whether that amount of data center growth can be brought into the future or brought forward. Will companies basically be expanding data centers and GPUs for data centers at the same rates that they have? Are they all going to be Nvidia GPUs? Is anyone else going to come into the mix? And already there's plenty of companies trying to disrupt Nvidia's market, trying to create alternative products. They don't even manufacture the GPUs that they sell. They do design them, but they're manufactured by TSMC. So yeah, look, it's a great story. It is likely to probably go a bit further in share price, but whether there's value there or not is another question entirely. For our own market, we're also in the middle of an earnings season, and to be honest, it's been a little bit underwhelming. We've seen drops in earnings from some of the large banks. We've seen drops in earnings from some of the large miners. In fact, our market is seeing lower earnings this year than we did last year, and that's despite our market being at all-time highs. A lot of the earnings results have been misses as well, so they've missed analyst expectations. So we've seen plenty of companies close lower on the day of their report, and as a result, you would have expected that to have dragged the Australian market lower. That hasn't exactly been the case though. A lot of companies have fallen on the day of report and then been bought right back up in the sessions afterwards. There's plenty of examples of that, but I think the most prominent example is probably CBA, Commonwealth Bank, which fell, I think, around 2 to 3% on the day of the report, and then, over the following sessions, it regained those losses. It actually then went ex-dividend, and again, it actually retraced the dividend in the following sessions. So it is a little bit of an underwhelming season. It certainly hasn't allowed our market to reach fresh highs, and to be honest, in a normal market environment, I would have expected a bit of a pullback after an earnings season like this. But with global markets around the world reaching all-time highs, with strength in the Japanese market, the German market, obviously the American markets, we don't want to miss out on that, and so any softness is just being bought back up at the moment. So it is something to watch out for. stocks are now very, very expensive after this earnings season. They will be going ex-dividend over the next few weeks. Will a bit of a profit-taking pullback in the US or in other parts of the world, will that trigger our own negativity? Because I'm not sure these earnings are enough to justify the current all-time high levels. Additionally, I wanted to touch on iron ore. Iron ore's fallen around 10% across the past fortnight. That's on Chinese futures markets. It's fallen off quite strongly, and there's perhaps a number of reasons for this. We've seen Chinese inventory data at steel mills. Iron ore inventories are up about 25% since the start of February, which is a huge jump in just 1 month. We've seen Brazilian producer Vale announce they're looking for places to sell their iron ore outside of China as well, perhaps signaling a bit of demand weakness in China. And we've also had the Chinese New Year. We have moved into the Year of the Dragon, or the Long, with the new year, a change in cycle, it perhaps can change a bit of sentiment in people, a change in markets, and perhaps the uptrend that we saw towards the end of last year in iron ore has come to an end. And now we might see a bit further of a pullback in iron ore. So with iron ore dropping lower, dropping about 10% in the past fortnight, we've seen the iron ore miners largely come off. Rio, BHP, and to a lesser extent Fortescue, they've all sort of drifted off quite a lot. In the case of BHP and Rio, they weren't helped by pretty underwhelming earnings results. Fortescue has been a little bit stickier in holding up, and that's probably because its earnings result was better than the other two. They will all be paying dividends over the next sort of couple of weeks, and with iron ore prices languishing, it's hard to see them really bouncing back up too much, especially with those dividends coming out of the share prices. So with the iron ore miners coming off, iron ore coming off, and some dividends coming out, that's going to be a bit of an anchor to our XJO. Our XJO is going to find it additionally hard to rise with all of those things happening. And for our market to rise, we'll probably need to see the banks continue further higher. Now, our banks are at, about as expensive as any global banks are. And so I think it's additionally going to be difficult for those banks to add further points to the market as well. So let's have a look at the charts for this week, guys. This is the XJO, the top 200 stocks by market capitalization, and really it's been on a fairly strong uptrend since the end of October. That was when we had the Federal Reserve meeting where they quote-unquote pivoted towards, I guess a more dovish stance. Obviously the rate cut timetable has been pushed out probably to June, maybe even later, but markets are happy to assume, a more dovish Fed and that the next move will be lower, and that's allowed this rally to occur. Over the past month, though, over the month of February, we've really struggled to add further gains to the market. In fact, this was the last day of January here, and we reached 76.80, and other than a little bit of a spurt on the 2nd of February, we haven't beaten that level this month. We've had 4 days of very lackluster gains in a row here, and really we look more sideways, grinding to the point of this triangle. Resistance is at 76.80, we've got this trend line here, and look, if we do break higher, we might add a little bit to this market, but I can't really see too much more upside, and to be honest, I think there's a fair chance that the next sort of 100-point move is to the downside or so. But we could easily head into the point for another week, and that would put us in early March right around sort of 76.50, if we can even make it to that point. For the US market, they've been obviously a bit stronger than we have. We can see the result of the Nvidia report. That was this day here. It actually reported on the night of the 21st and then traded higher on the 22nd. And they've been on obviously a very strong uptrend. They have, however, shown a bit of a candlestick reversal signal over the past 3 sessions. And we call this an evening star pattern, where you get the bullish day here, you get the doji day or the flat day, the neutral day, and then you get the bearish day. It's not the most convincing evening star because the bearish day overnight really wasn't very convincing selling. Usually with the bearish day, with the bearish day, usually you want to see that come down quite a lot, and instead it was a very lackluster sell-off. Regardless, if they do sell down tonight, I think that will be a bit of a reversal sign. We should see a move back to at least the trend line here, possibly around sort of 50.20, and if that breaks, that could be a signal we're about to see, a notable bit of profit taking. If they do have some real profit taking, 4,900, 4,800, either of those might be the eventual target. So I will end it there for this week, guys. Hopefully you enjoyed. If you did, please consider clicking the subscribe button. We're very close to the 500 subscriber mark, and it would be a real milestone that we'd get great joy out of achieving. So if you would like to put a smile on our face, click subscribe, click the like button, and we'll see you in the next one.